Good afternoon, everyone. This is Henry Gambell with SimplerOptions.com, and in tonight's free video, wanted to catch up on a couple of ideas that I shared with you in some of our previous free videos and share some ideas that I have as we head into the new year. So, one of the first ones is looking at ITB, and in this particular ETF, we discussed this with the idea of playing it long because we had a daily squeeze in play, and also something that I find to be extremely helpful here in Thinkorswim charts is just knowing that anytime you see this new high reference bubble populate, well then you know that you have a new high for the amount of data that is generated. So if you don't work any other concept with the kind of basic nature of a squeeze, take from this the idea that if you have a squeeze and you can accumulate a position near your reversion to the mean type levels, selling part of that at the new high is a great place to have your first target. Now if I get my extensions in this, that'll be great, but that was an opportunity to peel some of this off, raise some capital, and head into the new year with a little bit more cash. Now some of its primary components, I feel like these are in exactly the same situation where you could argue that maybe they're a little bit extended, but at the same time we have had an excellent trend that led us into this period of consolidation. So I did not take all of these off. I did take ITB off, but I continue to hold DHI, and then also looking to Lennar to see if these two names can follow through a bit more into their earnings. Now you could argue this a couple different ways. If I was doing that all perfectly systematically, I could have taken Lennar off, some of this also at the highs, but I tend to shoot for those 21 or the 1272 extensions rather while we hold the 21 EMA. So I'm trying to see that through into the beginning of the year. If we do drop down into those moving averages, at that point I will try to find something to play long into the earnings series and see if I can also get a kick off the implied volatility. Now, if that's something that I'm playing everything to the long side, I do think it makes some sense to have some hedges on as we head into the new year. And one place that I'm looking at doing in that is in the Qs. Now, I don't have a specific signal here other than closing below the 21 EMA. And I think the general nature of the market, you do have a fair amount of bullish sentiment, which would be, you have to kind of shake the tree a little bit, get a little bit of a reversion to the mean, but I just thought it was interesting to point out the confluence with you here, how the previous swing high and swing low, based off the current swing high, to if we got a swing low that did the exact same thing, look how that would take you right down into the 50-day moving average on the NASDAQ. So there's a big difference in saying I'm bearish versus I'm saying that I think this could be a point for a reversion to the mean, and I've got some of those January puts to try and help cushion that through that move. One other way you can do it, and of course this obviously is a very directional approach when you see that type of a risk graph, but one other way is to set up some unbalanced flies in the key, or in this case I did it through SPX because that has better liquidity than the NDX options did. But this is just my way of thinking to say, okay, if we move straight lower, my NASDAQ puts are going to do well. If we end up maybe holding a little bit of a bid, strategies like this, with your unbalanced flies and SPX can be a way to cushion that if it decides to climb a little bit higher. Now of course that is among different indices, which was kind of the idea, to allow them to ebb and flow and still make money in both of them in a perfect world, and that's a couple of places where I have those trades set up as we head into 2018. So one thing I forgot to add in here, and I'll have them just splice this either in at the end of the video or maybe somewhere in towards the beginning of the premium content, but I just wanted to also show you that I have taken some of the ideas that John shared through the tax loss selling course as well. Now, I didn't take all of them because of course I had to take whatever was appropriate for just the number of positions that I was willing to hold, but I'm looking at that idea with Under Armour, with GoPro, with Triple D, flattened out crude like we discussed in that video, and a lot of these other holdings are still the same, so I'm going to be working through that. I thought I would also point out with names like FLIR, just notice that when the markets close, these are not good readings on those prices, so don't let that throw you. But also in thinking about this and saying, okay, why did you take these positions through Tastyworks as opposed to Thinkorswim? Well, because the commissions are much better here. Now, Thinkorswim will get you for the $5 on the opening trade of stock, but they're also $5 on the way out. So if I'm thinking, okay, I'm going to take these types of, because you're trying to make a little bit smaller profit with those types of trades, let all the selling come through, and then if you can get a bounce of a couple of bucks towards the beginning of the year, well, you're looking for those little bit smaller types of profits. In that way of thinking, I'm always going to try to keep my commissions as low as possible. And I thought that, if you're looking for another place to be doing this type of work, this may be a helpful addition to it. So we'll try to get this spliced in with the other video. I hope you find that as a helpful complement to your trading. If there's anything else I can do for you, let me know. Otherwise, have a great New Year's, and I look forward to trading with you in 2018.